All right, hey traders, TG Watkins here. Let's see how everybody is doing today. And so we have, well, it's the last day until we get CPI. CPI is going to be tomorrow, Thursday morning, and let's, we'll have to just see what that's going to be. So let's kind of dive in a little bit. Looks like my computer wants to be slow this morning already. And there we go. Okay, let's see what we can do about that. All right, so let me bring this back up. Good morning, everybody. Nick, good to see you. Let me get my charts back up here. Yep, all right, I guess it's a little slow. All right, so I'm getting a little bit suspicious about this market. Yeah, things have been looking bullish, and I do have a feeling we're gonna go higher overall, but I'm still waiting to kind of see a pullback, some sort of pullback, because I've been looking around and looking at some names, and today especially, it's kind of interesting that today seems to be a fairly big day, junk off the bottom. So I'm noticing names that have just been kind of going, that have been really, really beat up for quite some time, and then have been going flat, and then they are popping today, like the day before CPI. So it just seems a little bit fishy as far as that goes. And then we've also seen a lot of names already have pretty big moves. The other interesting thing is retail. Like, I look at my list of kind of retail stocks, AEO, A&F, so Abercrombie and Fitch, American Eagle, Burlington, Guess, Fossil is moving, Skechers, TJ Maxx, Victoria's Secrets, Goose. Goose is a jacket clothing company in Canada, and it's going up. And so I'm looking at these things and being like, having to scratch my head saying, why are they going up? What's the narrative? What's the theme? Is the recession not going to happen? What is the market telling us about these, or the reason for these names going up? Or is there no reason? Is it that they were oversold and that they just caught a really good short covering rally and they're moving? I'm having a hard time figuring that one out, especially since we think that, well, I even just saw an article earlier this week that consumer credit debt is high as it's ever been in over a decade. So we're seeing that situation. I'm like, I don't know what's going on as far as, what's the thing connecting all these dots together. So getting a little bit suspicious. As I said, a lot of names have already been moving. And so I'm like, I want to see some sort of pullback, some sort of test of support, because at this point, it's hard to be chasing some of these names. I'll go through those in a second. I just wanted to kind of cover that on the top of things. We do know that we've had this trend line in through here. That price is going to be running into resistance. The daily 200, which has also been resistance, is right at that trend line. Now, I do think that we could see that maybe be exactly resistance. But if we do get a pullback into support and this market actually decides to go higher, we could see things go a little bit further. And let me bring you to 2002, and let me show you an example of kind of where I was looking at this, to where it is possible for price, for the SPY, to go higher than where it is now, beyond that trend line and beyond the daily 200, and yet still be bearish afterward. So I kind of showed this to my Moxie subscribers, but you can see back here in 2002, right here, almost making new highs. It was essentially a double bottom, or double top. So double top right there. But this area right through here, as it rolled over, found some support and then decided to move up. Now, it was fairly shortly lived, probably lasted a week or two. And you know what? There could have been some pretty good strength across the market and across some tickers, individual tickers, as that happened. And then it kind of just faded. And you know what it faded into? It faded into the next largest decline. And so I think that we as traders kind of need to keep multiple things true in our head, or floating around at the same time. And I kind of wonder if this is one of those things that we need to keep in mind, because looking underneath the surface, looking at individual stocks, we are seeing that things have been beaten up a lot, and we're starting to see that things are moving up, and that maybe this is January, maybe tax loss selling, all the losers got kind of sold off, and maybe there's kind of some fresh money to go around, and people are just seeing that there are good opportunities, oversold opportunities to get bullish on. And as I said, with those retail names, we are seeing some strength coming into the market. And so if that carries the market up here to where it comes up to its previous high, that might look really good and really strong, and it could lure a lot of traders in and lure some new money into it, only to have it be like, aha, nope, we're going to trick you out and go all the way back down like this. So if we look at what we're dealing with currently, and if we kind of take that as an example of the potential that what if price does actually go higher sometime in the near future, if it did that, like similar to 2002, we could do this, which is all the way up at about 411. Let me see if that was about 410, 411. So we could potentially see, and I don't know if this is going to happen. We need to keep watching. I'll show you the other case, the other bearish case as well. But we need to be prepared that there is the possibility that price could come all the way up here. It could break the trend line, it could break over the daily 200, and it could go up and almost look like it's going to make a new high. And then that could actually be the end of things. So, we've been really fixated on this trend line simply because it has been working. And then you know what? If sometime in the next near future, if price breaks up over it, that's probably going to lure a lot of people in, a lot of money in, thinking, oh, hey, here we go. And it might, maybe it does end up being bullish, but we also need to be prepared that it doesn't. So when we draw a line in the sand like that and have that trend line and it starts to break it, it could fake a lot of people in. So we just need to be on guard that if it does go up there, we need to have our awareness that, is it going to work? Is this a new bull market? Is this strength? Or is this just a glorified bounce and uptrend in yet a still bear market? And so we just need to kind of keep thinking about that. I don't have those answers yet. We're going to have to wait and see. But as I said, I am seeing strength out there. And I am seeing the big names like Amazon and Tesla and Apple and Google. They're still struggling, but they do look like they're oversold to a point where they could bounce to, and that could help lift the market a little bit further. So again, we need to just kind of keep studying and figure out if this is going to be yet another bear market bounce or bear market rally that might take us further than we think, and it could still roll over. So I just wanted to bring 2002 as an example. I'm sorry if I keep repeating myself, but I got people tuning in at any time here, and I just want to make sure everyone's clear about what I'm trying to express in through here. The only other thing that makes me a little bit cautious about what the market is doing currently is that we still have not touched the hourly 50 SMA in through here, and we are still kind of dealing with the hourly 200. What I prefer to see, and really in an ideal world, and maybe this doesn't happen because maybe if this is a giant short squeeze, it's just going to keep squeezing, it's not going to pull back. But ideally, I would like to see this, where price pulls back and actually taps the hourly 50 for support and then starts to move up. We don't have that yet. I don't know if CPI tomorrow is going to do something about that, but I definitely don't want to be doing anything like today going into CPI. I mean, if I did, it would be a day trade, and you just have to go around and find something like that. But as I said earlier, it does look like we're seeing some junk off the bottom today. Yeah, Joe, man, I woke up this morning and checking out my news feed. I heard that there's now some FAA stuff. So that's the Federal Aviation Administration. And if you guys remember, a few weeks ago, Southwest Airlines had basically a computer scheduling meltdown, and they had to cancel thousands of flights. And they were kind of the butt of a lot of jokes. And my understanding from another pilot friend of mine is that Southwest is using software like from the late 90s. And so they're pretty outdated, and they really need to get that fixed up. Well, one of the memes that I saw was like, yeah, Southwest computer system screws up, and then you see FAA underneath it and says, hold my beer. So something, yeah, I need to kind of look into this a little bit more, but the FAA now has a computer issue where they're crashing, and that's not a good situation. So, I guess how the turntables have turned. If you guys, The Office, Michael Scott, that was one of his phrases. Yeah, no. So Nasir, I'll say two things about the whole Fed pivot thing. One, Jerome Powell, very interesting. I watched his brief speech yesterday from I think it was what Sweden or something like that. He really didn't talk much about like his stance or the FOMC or anything else like that. The most telling thing that he was talking about is, hey, if we're going to be independent, if the Federal Reserve is going to stay independent, we need to stick to what we've been told to do, and we need to not try to venture outside of it. He was basically saying we need to not make monetary policy or financial policy based on equity or equality or the environment. And I gotta say, I kind of, not that I'm against those things, but I kind of like that what he said that, we are an independent institution. We are not voted in. We don't have public opinion. Like we are on our own. And I like that he was saying, no, we have to stick to what we've been told we can do. We can't broaden our horizon of powers because they have not been voted in. They get picked, and those kind of decisions, about the environment or of social causes or equality and all that kind of stuff, needs to be run or determined by a body of our institution that has voting abilities from the population. I just like how that works. I think that's good. I think that is our democracy, and I think that makes a lot of sense. And I appreciate hearing him actually say something like that, to where the Fed kind of needs to, stay in their lane, basically. And he said, no, we need to stay in our lane. So I thought that was a pretty good takeaway from what I got. So anyway, it's a little sidetrack, but on the Fed pivot, yeah, a true accepted Fed pivot evidence of real soft landing and other macro factors. Um, it's still challenging because we do see the market, and the market keeps, they keep talking about easing monetary conditions. Well, the Fed doesn't want that. We see the dollar coming down. We see TNX coming down, TLT going up. These are easing of financial conditions. And this could, if that continues, the idea is that we could get inflation coming back, and now we're going to be just chasing inflation. And that's going to be a problem. So the Fed doesn't like to see that these monetary policies are starting to ease up a little bit like that. They don't like seeing that the market's going up. So I think we do need to be on guard that the Fed is going to continue to stay active. They're going to continue to raise rates. They're going to probably hold rates, and then we just need to see if the market actually believes that. Now, the other thing is, since the whole FOMC, the interest rates, the Fed's direction is pretty much known, as long as they stick to that and don't blink too soon, playing a game of chicken. If they don't turn their steering wheel before the market does, then I think the market was taking that information, saying, "Oh, okay, they're going to start getting easier, and now we can plan for that." And at some point, getting easier, they're going to pivot, and we can be bullish again. However, the next thing we might need to incorporate is, what if information about the recession starts to come up and sink in, and the market now starts to say, "Oh, it's now less about interest rates because we already know where they're going to go and what they've been doing. It's more about how is the economy going to be reacting, and that we could be getting into a recession." Think about the yield curve inversion. I think it's like what, pretty much 100% experience. What am I trying to like? Like without fail, like 100% out of 100%, that anytime the yield curve inverts, it's when it starts to uninvert is when we get that recession. And the yield curve is very, very deeply inverted, hasn't quite turned up yet. And so like the recession hasn't happened yet. I mean, again, correct me if I'm wrong, but 10 out of 10 times, it's been proven that when the yield curve inverts, it always precedes a recession. And so I think we need to be aware of that, watch for that, and then usually the recession starts when the yield curve starts to uninvert. But it hasn't uninverted yet, but boy, it's really, really deep. And so, if we believe that indicator and that situation, then recession might be the next thing that really gets the market rocking and rolling, perhaps to the downside. Okay. Yeah, so CPI is tomorrow. I would imagine it's supposed to be coming in cooler, but that doesn't mean it's gone away. And well, that's something to kind of keep in mind. Remember that yes, it's on a downward trajectory, but there could be some time in the future where maybe it just starts sticking. So, we worked our way down from like almost 9%. Now I think what we're like 6, 7, depending on which number you're going to be looking at. We're trying to get down to 2. What if it doesn't get down to 2 anytime soon? What if it actually kind of sticks around 5, 6, 6.5, 5.5? Like what if that happens? So that's just kind of another thing, another idea to keep in mind. All right, so let me come over here. Let me switch to my percent change. And so some of the things that I've been looking at are some of these names that are just really quite high, actually. Let me show you IRDM. No, not that one. Oh, what was it? Oh, it was ISRG. ISRG. There we go. That's what I was trying to look at. So you can see here, I'm looking at some of these names, and ISRG is a fairly good example of a name that I was like, we should be seeing this thing cool off. We should be seeing that start to pull back to its daily 50 because you can see the giant gap between price and the daily 50. And I know I talked to my subscribers over the weekend about this, and they said, hey, if this thing's going to keep going, what I'm having a hard time with is that some moves are following the rules and some moves are not following the rules. And this is making it difficult to rely on certain setups. And it's making it making me a little skittish as far as going in on some trades because I can't tell necessarily if it's going to work or not work. And that's uncomfortable and challenging to work with. In this case, it worked. You can see that we had price over the hourly 50, but we had the Moxie indicator below 0. That's an inverse trampoline move. Price should not be over the 50 if the Moxie indicator is below 0. And that worked because you can see now price went down and it's starting to go back below the daily 50. I mean, first off, it went to the daily 50 and now it's below it. That makes sense. I'm okay with that. But then we look at something like Boeing, and Boeing is not following the rule. I would have expected that at some point, because the Moxie indicator was below 0, that this would have fallen over and fallen down below, but it did not. Now, it didn't. It also did not trigger a bearish situation. Notice how it never actually got rejected by the hourly 50. It dipped below it, but it never got pushed down or followed the hourly 50 down. So it never triggered anything bearish, but I'm also very surprised that it just kept going up. So, I look at ISRG versus Boeing. I'm like, okay, one of them worked, the other one did not work. And I see things like that. And then I look at something like AEO. Let's see. AEO, pretty good. You can see it too had a pretty big gap here between price and the daily 50. And look what it did. It moved back down to its daily 50. How did it do it? Well, there's your Moxie price trigger. And then you can see price started to get under the hourly 50. Now, AEO, American Outfitters, clothing store. Compare that to Burlington, B-U-R-L. Burlington was like, yeah, hold my beer. And you can see that from the same area where it was really high up there and very far away from the daily 50, here's the Moxie price trigger. It started to get rejected by the hourly 50, and then it decided not to. And it went completely the other direction. And so basically in the same category of stocks, basically clothing retail, one of them followed the rules, one of them did not follow the rules. And this is making it challenging for me to be able to rely on these setups. Now, we could always go in, and when it doesn't work, you get out very quickly. Or you can go in, and if it continues to prove itself, great. It's going to be a good trade. But trying to figure out, saying that, 8 out of 10 of these going to work? No, I've been finding it's almost like 40-60 or 60-40. Even we look at GES. GES kind of did the same. This is a guess. Again, clothing retail. Big distance between price and the daily 50. Moxie price trigger got rejected by the hourly 50. And then it decided to just turn around and go up, just like Burlington. But then if we look at GPS, this is Gap. Look what Gap did. Gap did what I would have expected it to. Here's where it's oversold. There's a big gap between price and the daily 50. There's the Moxie price trigger. There's price getting rejected by the hourly 50, and whoosh, it went down. Perfect. So you guys can see how I'm bringing up examples that are literally in the same category of names, and some of them are working and some of them are not. Yeah, so Nasir, kind of going back to your Fed thing also, uh, I and many of our other professional traders have never seen the market or sentiment more polarized. I'm telling you, it is crazy out there. Even professional traders are divergent as far as, are we going to be going up or are we going to be going down? And the challenging part is that the market is basically going sideways. And yet, underneath the surface, we have names that continue to melt down and continue to go down and be weak. And then we also have names that are actually moving up quite large and big and all that kind of stuff. So it's been really challenging. Yeah, like Venus. Okay, so Venus, renewable energy stocks look strong this week. Okay, well, tell me about ENPH. You know, ENPH used to be a winner, big leader, and did really well. And then all of a sudden, we got an inverse trampoline move right there. We got rejected by the hourly 50, and it went straight down. So, ENPH. Now, for solar, like, okay, this thing's been a beast. Every dip has been bought. So, yeah, looks good. But can I buy it here? No, I absolutely cannot buy it up here. And yes, this does look like a squeeze. So Venus, I think you're kind of touching on some of the things that I've been seeing as well. That some of these moves have been pretty big. Um, I also talked to the subscribers yesterday. What I'm seeing on a lot of these moves is that they were set up on a 15-minute time frame, but I had no hourly setup. And so, yes, they do seem a little bit indicative of short squeezes and short covering. And that's why I'm starting to be like, okay, it's gotten too far. I can't chase these things. I missed my opportunity, missed the window, and at this point, we just gotta wait and see what happens next. But yeah, I can't chase this. It's up here at the daily 30 ATR, and it's literally gone straight up on the hourly chart. So if you could find something like that, awesome. But yeah, right here, right now, can't do anything compared to ENPH. And then, let's see, SPWR, let's take a look, like SunPower, nothing happening. Is this going to turn into something? Maybe, but I don't see anything I can really work with yet. But that is where some of these names have been starting. They've literally been going down, and then they decide they're going to stop and they shoot right back up. Okay, let's see, Solar Edge. A little bit more constructive. This looks better. We have price pulling back into an uptrending daily 50 with the Moxie indicator above zero. We also have a trend line or a level here with the Moxie indicator starting to move up. It's not totally confirmed, but it's looking decent. So that's Solar Edge. Let's just look at TAN. The TAN ETF. It's mostly been going sideways, and you can kind of see here that it took its dip and then shot up. And I was like, ugh, it's a little bit difficult to work with. You've got to be pretty nimble and actually catch these things on a 15-minute time frame, and basically, feel like these things were going to go. They don't look like. I wouldn't have guessed that these things were going to pop up the way they popped up, especially with what the market's doing, and it's been a little bit surprising to see the strength in these names. It's like, okay. Yeah, Ross, so Boot, Boot was another name that I was looking at. It's like, these things look like they weren't going to do much until they finally did something. This one was a little bit better as far as the setup, but still, I wouldn't have thought Boot, Boot Barn, like what's going on with the recession, I thought, so the narrative doesn't really make sense. These things are just kind of moving on their own accord. I will say, however, that this dip right here, that preceded the big move, that was a trampoline move. So price below the 50, the Moxie indicator above zero, and you could see that there was a trampoline move back here on the daily chart and then a retest of the daily 50. And then we can see on the hourly chart that was basically a 50-250 maneuver where the 50 crossed over the 200. So yeah. Now, again, do I want to buy it up here? No. Could it keep moving? Sure. But I don't really want to be buying it up there because the risk of it wanting to pull back because it's up outside of that third ATR, it's up at the daily 200, it's up at the daily third ATR. Unless you're in it, you don't really want to go chasing it. So, but I keep seeing names move. Look at, I think Etsy. And Etsy was a name that I had discussed earlier. But what's happening is these things are just turning around. They just down, and then they zip up like that. Yes, it was basically a trampoline move on the daily, but they didn't really give me much of an hourly setup, and I wouldn't have expected these things to move like this. So yeah, they're just down, 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 and zip. So it is feeling a little bit short squeezy. I can't put my finger on it for sure, but yeah, it's kind of feeling that way. And again, it's a little bit hard to chase this. It would have been better kind of right here where price was just starting to find some support around the hourly 50, and the 8 was over the 21. It was flagging into the 21 EMA. So those were kind of those opportunities. Speaking of Etsy, how about eBay? Yeah, like look at eBay. These things kind of went down, 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 down into the end of the year, and then they zipped on up. And I think they all basically started, like, look at this. The move started right at the end of the year into the new year. So tax loss harvesting, I mean, once all the tax loss selling was done, the sellers shut off, and then we get a short squeeze. It kind of feels like that's what's happening, is because a lot of these names started to move pretty much right at the end of the month and right at the beginning of the month. And it was just pop, just zip right up. So yeah, and at this point, as I said, it's kind of getting hard to chase. I don't really want to be going long on a name when it's already up at that third ATR. Because you can see it went from the lower third ATR to the upper third ATR, and it's like, it already went from one side of the channel to the other side of the channel. I would like to see some sort of pullback before we kind of do something. Even Intel, we talked about this yesterday with the Moxie group. And, Intel, it basically did the same thing. Down, 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 and then zip, and just zipped up. Like without even a pullback. I mean, it just went down and then zipped like that. And so it's like, cool, I'm happy to see these things, and this is telling us that there's some liveliness coming into the market. But at this point, for something like even Intel and so many of these other names, I gotta wait. I gotta wait for an opportunity. It has not touched the hourly 50 since it started moving up. And in my world, there will be, at some point, a time when price pulls back into the hourly 50. So I just have to wait for that. And again, talking about that third ATR, we have price here at the lower third ATR, and it's gone to the upper third ATR. It's already crossed the channel. So the opportunity was at the bottom of the channel if we knew it was going to go to the top of the channel. I didn't know it was going to do it. And so at this point, being at the top of the channel, I don't really want to go long here. So we got to wait. All right, so that's kind of where we're at. Let me just wrap up with XLE. And it's a mixed bag for sure on the hourly chart. Don't have too much to say there. But what I'm concerned about is price potentially getting stuck underneath the daily 50 and maybe from this double top. So if this is going to go down, it looks to me like double top and then price getting rejected by the daily 50, and it could move down. If that doesn't happen, then let's keep our mind open to possibilities. And if price can continue to say hold the hourly 50 and trend up, then okay. But right now it's really just kind of going sideways, and it's very difficult to kind of figure out a direction when it's going sideways. But I've got my eye on that daily 50, and it has me a little bit wary of what's going on there. All right, guys. So I got to get going. Moxie group, I'm going to be back on in an hour and a half, whatever time I told you guys. Yeah, I think an hour and maybe 30 minutes. I think I'll be back on 30 minutes with you. And so we can talk a little bit more about what you've been posting and go from there. But for the rest of you over in the internet, come over here to profitpilot.com if you want to look up more information about me and see where we can go from that. Hope you guys are having a good time, and we'll catch you later.